All right. We okay, yeah, cool. We're live. All right, fantastic, guys. Fantastic. Welcome to today's quick market update. This one's going to be a lot shorter, but I just want to give you guys a bit of an update on what's happening right now in the markets. And again, I just make this a lot shorter one for you. Before I get started into today's session, I must start off with a typical disclaimer. And let me go to this page right here. And let me go to this one right here. Alrighty, guys. So let's go through this here. All right, fantastic, fantastic. All right, guys, do not place a trade based on what you see in this video because trading is risky and it can cause substantial financial loss. There's no guarantees of making money in the markets, and trading is risky and it can cause financial loss. It takes a long time to become a really good trader. Now, one thing I want to share with you today, also, if you haven't done so yet, is make sure you head on down to, where are we here? mastertraderlab.com to get your free trial to the Master Trader Lab. All right, fantastic. Now that's out of the way. Let me just make sure that everything is connected up here properly that I'm seeing, and then we can get started.
Hey, this is Russell, and it looks like earlier you went to...
Hey, Russell.
I didn't.
Alrighty. So let's get straight into today's session now. Let me start with the stock market. Now, I did a video, I think it was a live stream yesterday, I think it was. And I talked about how that on the short term, this is not the longer term, but the short term on the S&P 500 or the Dow Jones is that the momentum on the short term anyway, on this momentum on this leg up is still bullish, and we're still getting a very bullish. There's no sign of the short-term momentum changing. Makes sense? So right now there is actually there's no sign of that that momentum changing through here. So we would need to see this 24,000 once we start. Now again, the momentum on the short term is going up on here on this daily chart. If you're trying to understand where the overall market is going, then please, guys, please focus more on the dailies. The dailies for more like the shorter term shifts in the markets. Weeklies for a bit more of a longer term, like what's the bigger picture. If you start to look at, say, 5-minute chart, I got a question saying, John, the 5-minute chart. If I actually go to the 5-minute chart here. Let me see, what do we got here? I go to the 5-minute chart. Someone said, John, the 5-minute chart made a high and low. Can you do a quick video? Guys, you gotta really remember that whatever time frame you're looking at is, how do I say this? It's in conjunction to that. So if you're looking at a 5-minute chart, it doesn't matter whether the 5-minute chart made a high or low right now. Why? Because that could change within an hour. You know what I mean? Like, you don't want to be getting, does that mean the whole trend has changed because it made a high low on the 5-minute chart? Like, no, that doesn't matter, right? Because that's only a short term. That's real short term. That could change in half an hour. That could change in 20 minutes. That could change in 1 hour. So you don't want to be focused so much on the shorter time frame charts. You really want to go to the daily charts to get that view, the overall view. Those 2-minute charts and 5-minute charts, they're very, very short intraday trading and a very, very short intraday basis as well too. So be very careful of that. So as I was saying before, right now, the short-term momentum is still to the upside. We haven't had a shift yet on the markets. Once we start to get a break below, say, this 24,000 level, that's going to be the shift in the markets to tell us that now we could possibly start seeing a leg down. So that's what I'm looking at for there. Now the S&P is starting to show signs. So for me on the S&P, it's a break below the 2600 level. That's when the short-term momentum is starting to shift from the. So right now the short-term momentum is still just slightly to the upside, but we need a close below the 2600 for a shift to be changed. And the same for the NASDAQ as well too. Now NASDAQ right now is actually slowing with momentum to the upside. So we have had a nice momentum move to the upside. We're slowing right now. Once again, we need a break below this sort of 6,900 level. And if we get a break below the 6,900 level, then that's going to be the shift in momentum. And then we could possibly start to see a leg down, but we haven't got that yet. So right now, the Dow Jones has still got a nice, strong momentum to the upside. It hasn't came, but the S&P 500 is starting to weaken, meaning the momentum on the upside. I won't go into detail about what I'm talking about there and so on and so forth, but I'm just telling you right now that the short-term momentum is still to the upside, but the NASDAQ and the S&P are starting to slow momentum on the upside. So if we get a close below the 2600 S&P, we get a close below the 2400 or 24,000 on the Dow Jones and the NASDAQ. And if you get a close, if we get a nice close below the 6,900 level, that should be the case to start seeing us sending to a leg on the downside. Now, I'm not saying that's definitely going to happen. So if we get a close below 6,900, then we're definitely going to definitely going to get a run back to the downside, back down to 6,100. I'm not saying that's definitely going to happen. So don't go out there and say, oh, well, John said if we close below here, it's definitely going to run down. No, I did not say definitely. No one knows what's going to happen. I'm just talking about the probability is now we're probably likely to start stepping down if we get a break below these levels through here. So that's the levels you want to keep an eye on for. Now, if we have a look at some short-term trend lines, we can actually start to see, right? We can start to see that we're right at the bottom of this trend line here as well too. So that's the Dow Jones. So that's the NASDAQ. This is the Dow Jones here. And as you can see, the Dow Jones is really starting to still at the bottom of that channel, and the same for the S&P as well too. So short term, we're getting a nice rally to the upside. We still haven't broken, but once we start to break this level through here, then we should start to see another leg down. If we do start to see a break below here the next couple of days, then that's going to mean, once again, the market is still making lower highs. Okay, so if you look at, say, the last 3 months, we've had a nice 3 month pretty much on a downtrend. We had like sort of a month on the upside. Market coming down. If we get a nice strong close below that 2600 level, then that should start to see a nice move on the downside coming back down through here. Same for the Dow Jones as well too, and same for the NASDAQ. Because we've been pretty much stepping on the downside quite some time, we've had a nice rally back up. If we get a nice close, strong close below that 6900, then we're likely to see a move back down. Now let's talk about silver and gold here for a minute. Silver and gold is a bit of a tricky one here now, guys. And the reason why is because it's really in no man's territory. There's no real strong trend or strong anything really. Like we've had a bit of a trend to the upside through here, but there's no real true strong trend on the silver market here. We're definitely getting a start to get a leg up and a leg down. But with the silver market, we're in no man's territory right now. If we go to the weekly chart and see what's happening in the weekly chart, we're getting right now a bit of a conflicting signal. Why? Because we've had these lower highs coming down for quite some time. Then we had a double bottom. And then the market started rallying back up, and now we're at this level through here. So it's really, for me, I'm just I'm waiting to see where this is going to break. If we hold here on silver, or even if we get a bit more of a pullback and then we hold and we rally and we get back above these two lines through here, then there's a high probability that the bull market is starting to get warmed up from there. And the same for gold as well too, right? You can see gold has made this lower low. This still could be some sort of lower high, and we have another leg down in the markets. That's still possible in the market. So right now we're in no man's territory when it comes to silver and gold. There's just really no clear indication of what's going on. It's pretty much just sideways. No one really in control. There's no dominant. There's no one. It's not a definite upward trend. It's not a definite seller market. It's sort of like just an overall sideways market. We're definitely not getting any strong breakout from there. So that's what I wanted to share with you today. If you have any questions, guys, then put them into the chat box. But I just wanted to give you guys a quick little update. from that. Now, guys, if you'd like to learn more about, my framework to, to trade in the markets, how to read the actual, the charts itself, the millionaire mindset, and get monthly trainings to help you understand the markets a lot more, then go down to mastertraderlab.com and grab your free trial to the membership. And if you don't like it, let me know and you'll never be billed. So let me answer some questions here, and then I will finish up. This one's just going to be just a pretty quick one for you guys today. Hey, Marshmallow, Gold and Silver, Orpheus, full-time frame continuity on the monthly, weekly, daily, and then I enter on the hourly. That's my bread and butter strategy. Fantastic, fantastic. There's a high probability that longs and shorts get chewed up around here. Well, depending that's you can't have that blatant statement across everything, right? Because if you're trading, say, a 1 minute chart, then that's, again, if you're trading a 1 minute chart, that means you're going to be in and out pretty quickly on sometimes you're going to be in and out of the trade within a few minutes. So depending on what time frame you're looking at, depending on what market you're looking at, or depending on time frame you're looking at, it's not a one size fits all. It really isn't. Trend lines on multiple time frames, monthly, weekly, daily, reversely, broadening formation coupled with full-time continuity helped me immensely. Okay, cool. Hello, Sean. Jack. Hey, Jack. Hi, John. Why you choose IB as your broker? Because I just use them as my broker. Remember, guys, it's not the broker that's going to make or break you. Every single broker out there has access to the same data. It's not a lot of people say, what broker do you use? That doesn't matter. How good of a trader are you? You could use any broker and do well. I just use Interactive Brokers because they're one of the they're one of the best brokers that they're most reliable brokers out there, I believe, to have my funds in when it comes to trading the stock market and options, that is. Now, with my Forex and futures trading and stuff like that, I use another broker for that. And do you use the Trader Workstation to place your orders or web-based? For me, I use web-based, Jack. But Jack, again, both those questions is irrelevant. It doesn't matter whether you use web-based, doesn't matter whether you use another broker or what broker you use. It doesn't matter. It's not the broker that's going to make you do well in the markets. It's not the broker that's going to make you money in the markets. It's how good of a trader are you? Because if you're a good trader, it doesn't matter what broker you use, you're going to do well. That's just the bottom line. It's not, well, I'm going to use web-based because he's using web-based, and I'm going to use IB because he's using IB. It's like, that's irrelevant. Again, every broker has access to the exact same data and information, so it's not the broker. I just use IB because they're just really reliable and they're very, very strict on the paperwork and all that sort of stuff. So security reasons and so on and so forth. What is my thoughts on the USD? I think that's UUP. Well, we're starting to slow a little bit here, aren't we? But we're still making these higher lows. So if I'm looking at this chart through here, we've got this last significant higher low, and we had this last significant higher low through here. So still buyers are in control. It's definitely slowing a little bit because we're just instead of nicely stepping up, we're just sort of slowing. We're sort of slowing through here, but nothing has really changed on there. And yeah, once again, if you look at the weekly chart, you can see how the weekly chart's higher, low, higher, low. So the buyers are still in control, and we definitely have this sort of action happening on here. So buyers are definitely dominant right now, but we're getting a bit of a slowing action. What I mean by slowing action is that you can actually see that it's starting to sort of possibly get a bit of a round top through here, but I mean, it's not, because if it's strong, we'll get a rally up, a pullback, and then a rally back up again as well too. So we're not getting that. So we're getting a bit of a slowing action through here. It's pretty much sideways, but the dominant still is the buyers are raising their prices right now. So until the buyers stop raising their prices, that's when we're probably likely to see a bit of a pullback through there. Do you think that once the January options expire on the 25th, we'll see a leg down? You know what? Where's my crystal ball? Where's my crystal ball? I need my crystal ball. Rubbing my crystal ball now, and it says, I have no bloody idea. I have no idea. No one can tell you that. On this date, we're definitely going to see a leg down. I don't know. Follow the market. Follow the market. All I say is this, guys, on the Dow Jones, if we start to get a close below the $2,400 level, a close below the 2,400 level, that's showing now momentum is shifting. On the short term, momentum is shifting from the upside, because the momentum, obviously, this leg here, ever since this candle right here, we had a little bit of a short shift on the downside. Then we shifted back to the upside, and the momentum ever since this candle here, momentum has been to the upside. So we haven't had a momentum shift yet. Now, I won't go into too much detail about the momentum shift here, but I'm just saying that ever since this up candle here, we've had every single candle here has shown momentum to the upside. And even today's candle is showing momentum to the upside. So it may or may not, but we're definitely at a conjunction point where, you know, the X marks the spot. We had a lot of resistance level through here. So if we do get a close below that 2,400 level, then that's going to show now that a momentum short-term shift on the downside on the daily chart there. And then once that happens, because we are in a downward trend right now, then we should start to see some selling movement in the markets. So depending on what happens through there, but once again, we're at this whole area through here on the Dow Jones where there's a lot of resistance through here. So I am expecting some sort of a pullback here soon. It may not happen. It may go sideways for a while. So I'm not saying it's going to happen straight away. That's why we need to follow the market. Right now, the momentum is still this on the daily chart here. Okay, guys, not the weekly chart, not the bigger picture. I'm talking about like what's happening right now. Momentum is still shifting on the upside. So we haven't had a momentum shift yet. If we get a nice momentum shift down there, once again, same for the S&P 500, which is a close below that 2,600. Let me remove this trend line through here. 2,600 for me is a short-term momentum shift on the downside, and then we're likely to see. So what ended up happening here, guys, is it was this candle here that we had a shift of momentum to the upside. Okay, momentum shift on the upside. Then we went over. Then this candle here, right here, was saying that we could possibly start to see a momentum shift back on the downside. Then we had this candle here. The very next candle shifted back to the upside and said, no, momentum's not to the downside. It's shifting back to the upside, this candle here. And ever since then, every single candle that I'm looking at is showing momentum to the upside. It's showing momentum to the upside. Now, today's candle is now showing slowing in momentum. It's slowing momentum, but it's definitely not a possible momentum shift yet anyway. We don't know that yet, but it's definitely a slowing momentum there. So I hope that helps, guys. I hope that helps from what we're looking at there. So again, now I'm getting into like really advanced type of chart reading here, guys. I can teach you guys so much about chart reading. I really can. There's so much that I can teach you about reading the charts, from understanding who's in control right now on the big picture, you know, and what's the overall big picture telling us, from the short-term picture to even like short-term momentum. Where is short-term momentum right now? And how do you read that? And so much more. There's so much that I can teach you about reading the charts. Once you start to understand this stuff, then you'll be able to start to see it really clearly. And yeah, so it's really interesting to see that. So, and again, same for the NASDAQ as well too. But the NASDAQ's today's candle is showing that momentum is slowing now. We're slowing with momentum to the upside. So once again, if we get a close below that 6,900, that's now the short-term momentum is tipping over, and we're possibly going to start to see another leg down in the markets if that happens there. Possibly that is possibly, and then maybe we see another leg down and we break the 6,200 level. I just think, there you go. I didn't have to read the rest of your sentence there. because whatever you think is always wrong anyway. Whatever I think is always wrong. I just think things are going to get messy for the next few days, one direction or another. I wouldn't say messy. I wouldn't use that language. I would just say that the market is what it is. And then if we do get a shift, then we can trade that. If it meets your plan, that is. If it meets your plan. So that's what I wanted to share with you today, guys. I wanted to give you guys a bit of an insight look to what's really going on in the markets right now and what's happening right now in the markets. Overall market is still on the downside. The sellers are still in control, guys. Just because we had a rally to the upside this last month does not mean things are changed. You know, we're still making those lower highs in the market, so the sellers are still in control. If we do get a close below the 6,900 on the Nasdaq, then once we do, again, guys, what we do, we need to respond to what the market is telling us right now. That's all we can do. We can't get in based on what we think is going to happen, because what you think is going to happen never happens. And what you believe is going to happen always doesn't happen. So we need to get out of our heads. We need to get out of our ego. We need to get out of our way and try and stop trying to be right with the markets and say, you know what? I need to remove my ego here and say, okay, what is the market telling me today, right now? So if I'm trading the markets and I'm in a trade, I'm like, okay, what's this candle telling me right now? Should I be in or should I be out? Should I be in a trade right now? Cool. I'm in a trade. Cool. The very next candle. Should I be in or should I stay in or should I be out? I know exactly what the rules are. There is no like, I have no idea what's going to happen. The next candle, the next candle, the next candle. All we can do is respond to what the market is telling us right now. You're not smarter than the markets. I'm not smarter than the markets. I have no idea what's going to happen in the future. I don't know how the future is going to unfold. And it's our job to be flexible and flow like water, like Bruce Lee, flow like water with the markets. And as the market continues to tell its story, it's our job to get out of our way, stop trying to force things into the market. It's like, hey, market, what are you telling me? And then I'm going to flow with that. That's the only way for you to get ahead in the markets, guys. Just throw your ego out the window. You don't know what's going to happen. You only can respond. And that's why I say the better you can read these charts, the better trader you'll be. Because once you start to understand a lot of things like I'm talking about today, like who's in control overall in the weekly charts, who's in control right now in the daily charts, are sellers in control, are buyers in control, all that sort of stuff, then we're looking at now short-term shifts on the daily charts and momentum, you know, short-term shift on the upside and so on and so forth. Short-term shifts on the downside, and we can see where momentum could quite possibly be shifting and so on and so forth. So there's so much you can learn about understanding the markets and reading the markets as well too. So, and that's why, once again, guys, the better you can read the chart, the better trader you'll be. In my opinion, there we go again. Does your opinion, bulls are in control now, bears have already lost control about last week? Really, Sema? Really? Well, if you go back and look at the markets, well, that's your opinion, and that there right now is totally invalid. Why? Because if you look at the markets right now, high, lower high, lower high, this still could be another lower high. The bulls are not in control right now. There is no way. And what I said there is an absolute fact in the markets, that if the sellers are lowering their prices, doesn't matter how big the rally is, as long as they're lowering their prices, the sellers are still in control. Yes. So Trade Doc, you're saying here, right? You're saying, oh, this is the high low here, so buyers in control, right? This little one dip here. So when we're looking at the markets and we're analyzing the markets, the most important parts in a downward trend, in a it looks like a lower high to me. Oh, sorry, Trade. Sorry, my bad. Forget what I just did there. It's definitely a lower high. Definitely a lower high. In a downward trend, lower highs are the most important part. It's not a matter of opinion. It's a matter of fact. Is this high here lower than this high? Yes, there is no ifs or buts. So therefore, the sellers are still in control. Get out of your head, guys. Stop trying to say, well, the Bulls are in control right now because blah, 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 blah. It's a story, BS, because you're only setting yourself right down the wrong path. Look at the facts of what the market is telling you right now. Yes, we've had a nice rally to the upside for the last month, but until this high back here is broken, then that's when things are changed. And I said this yesterday in yesterday's live stream, but this is where most people who trade the crypto market got in trouble for the last 12 months, because we get a strong rally like we are right now in the stock market. And then guess what? And then everyone's saying the bottom was in Bitcoin, right? And then guess what happened a month later? The market did sell off really strongly again. Don't fight the market, guys. Do not fight the market. You're not smarter than the markets. Trade what you see, not what you think, hope, or fear. Trade what you see, not what you think, hope, or fear. And what do you see right now? The market is still making lower highs. If you're thinking that the bottom is in right now, you are guessing, you're gambling, and that's your ego trying to be right with the markets. You're not smarter than the markets. And I guarantee you, 90% of the people that are watching this video right now won't be here in 12 months' time. So please, guys, please throw that ego out the window. Look at the facts. I didn't care about your opinion. I didn't care about what you think is going to happen, or whatever, right? Just look at the facts. So right now, the sellers are still in control. And until the market tells us that's the case. Again, we can get sharp rallies here in the markets. Same for the Dow Jones, right? Is this high here? We haven't actually made a lower high yet, but is this high here clearly lower than this major significant high back here? Yes. So therefore, without you trying to guess, okay, well, the sellers are still clearly in control. Just because we've had a rally doesn't mean the sellers are not in control. So, and it's always reading the market as it unfolds, because yes, we can go from a downward trend to an upward trend and so on and so forth. There's a lot of things you can do there to really look at that. So be smart about your way of trading, guys, and throw your ego out the window, because it's only going to destroy your trading account. I can guarantee you that. And the more you can get out of your head and say, okay, what's going on right now with the markets? Then that's the only way for you to truly move forward in the markets. Again, it's not about you being right. You just say, okay, what's the market telling me right now? Let me read the picture. So who's in control? Where's momentum? And so on and so forth. And then we can start to go with that as well too. All right, guys. So once again, guys, if you'd like to learn more about my chart reading strategies, mindset, framework strategies, and get monthly trainings to help you understand how to read the charts properly, then head on down to mastertraderlab.com, grab your free membership, and I'll be glad to help you out more from there. So, all right, guys, thanks a lot and have an amazing day.